positioning is very stretched, and the short sellers in the market, the investor you just talked about, well, he's been on this position for some time now. So given the geopolitical risk in the market, the growth uncertainty still in the market, I think some breather, taking a breather here makes some sense that we could see a pullback over the near term, but very hard to time the top, Samantha.
Something else that we mentioned was, of course, being a big week in earnings. We're going to be hearing from a lot of the big sort of European banks, but also some of the tech titans too. What is this likely to tell us? One, about that banking crisis, of course, we were dealing with earlier in the year, if things are getting better, if we're out of the woods, but also the tailwinds potentially that AI is providing in the tech space.
Right. So I think what 3Q earnings are going to tell us is that the economy as of now remains fairly resilient and strong. Now, growth, it's middling, but we're talking about real growth here. So nominally, earnings should come in actually in fairly healthy territory. And we are going out of the buyback blackout here. So buybacks are going to come back into play again. And finally, the last 2 months of the year seasonally strong for the market. So we do think that things look pretty okay for now.
Great. Dan's got a question, I believe.
Hey Eli, Dan joining the conversation from Riyadh, Saudi Arabia today. I wanted to get your take on this new war that we're seeing unfold here in the Middle East, certainly adding to uncertainty through Q4. First it was Russia's invasion of Ukraine, now it's Israel's war against Hamas in Gaza that investors appear to be looking at. What's your view on the perhaps mid to long-term geoeconomic impact of this, and how should market investors be pricing this risk?
Right. That's a great question there. Now, as we look back to history, geopolitical risk rarely have a long-lasting impact on markets, right? So we think the impact of this on an isolated basis should ease over the long term, but we think that the knock-on effects from potentially higher oil, if we do see the conflict escalate, and also the fact that the uncertainties fitting into the U.S. aid of Israel, which plays into the $106 billion of fiscal going into, potentially going to U.S. fiscal spending next year, could mean that more volatility over the near term for long-dated bond yields, U.S.-dated bond yields, could come into the picture as well. So I think all this points to potentially more volatility, especially for U.S. equities over the near term. But longer term, we think that it would be a mistake to panic sell at this point in time.